Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions, Market Insider TV. This is our opening commentary. Friday, November the 21st. Good morning, everyone. Hope you had a nice evening. Looking forward to today's trade. Now, it looks to be another very volatile session. Extreme volatility yesterday as we saw a big sell-off here in the stock market. Now, we bounced off of support from the October lows and it's trading a little bit firmer here this morning. I think there's a chance to recover if we can hold those lows. And there was some comments by Fed Williams that had indicated he thinks there is a good chance we'll see a rate cut in December, and that has propped up the stock market, but also gold is fighting a bid off of that news. So that came out 6:30 Central Time or so, and that rallied the stock market off of its lows. Nat gas continues to remain strong. Crude oil down, but pairing losses from earlier in the morning hours. Silver still down sharply, while corn off 0.75 cents, beans down 3.5, and the wheat's fractionally mixed here in our early dealings. So we'll talk more about this. I will also be on RFD TV this morning at 8:15 Central Time, talking about the markets here. Hope you have a chance to tune in with that. All right, let's talk about the markets in here. So first of all, we've had check of South American here. Dry weather in parts of Brazil and into Argentina should act as a little bit supportive for soybeans, but the dry season in Brazil is going to come to an end as the monsoon season begins soon. It's not terribly dry by any means. In fact, Argentina would welcome a little bit of dryness, I think, because they've had some decent rain. So that monsoon season is certainly what trade is going to watch. Weather in December becomes very important to the growing season in South America. So far this week, we've had 3 private sale announcements, Tuesday, Wednesday, Thursday, and 3 sessions of lower values of soybeans. Not a surprise. If you followed us before, we talk about how the markets work and why this would lead to lower prices, not higher prices in the marketplace. So we'll see if we get another sale this morning. What we'd like to see is some corn purchases. We were hot and heavy before the government closed down on private export sales, and looks like there was a lot of sales that were made during the government closure. But since we've reopened, we don't have any type of sales to report this morning. Today is December grain option expiration. They go off the board today. First notice day is a week from today on Friday, November 28th. Now, all long positions are subject to deliveries beginning Wednesday night. So if you're a long December grain futures, you have today, Monday, Tuesday, and then Wednesday. You really need to be out of those. Friday will be an abbreviated session. We open the grain and livestock at 8:30 and close both of them at 12:05 on the day after Thanksgiving. Russia Sovcon yesterday, they raised their wheat production estimates from 87.8 up to 88.6 million tons. That's due to record yields in Serbia. Their first projection was 83.8, so they're up to 88.6, almost 5 million tons larger than their earlier projections. President Trump, overnight, late yesterday, has removed all tariffs on Brazilian beef, coffee, and other ag products in an attempt to lower food costs. It is expected that we will see some selling on the opening this morning in the cattle. It's early to get a good handle on the bid-ask in here, but I would say we're probably looking at $1 lower live cattle, 2 lower feeders at this point in time. And I'm sure the algo-type rhythm traders will sell this market and sell it aggressively. I think it would be difficult to say that the fundamentals and the technicals are lining up here. They're complete contrasts. The fundamentals are shifting to a little bearish here from the standpoint this importing of beef. Now, they only import select cuts of beef. Not everything is going to be moved across the border, but they do import certain cuts, and that is going to weigh on values, and those cuts were sharply lower in the cash markets, and I think that could hurt our cash markets here. Normally, you look at a $21+ discount of Jan feeder futures to the index and think that's friendly and we should move higher. Live cattle have a big discount as well to their cash markets, but it looks like the cash markets are going to start coming down, and that's going to pressure these markets here. So it looks like a lower opening in my opinion. Now watch the opening range. If we can get back above it, maybe we will rally as we have a cattle and feed report this afternoon that looks to be friendly. On-feed supplies at 97.6%, placements at 92.7%, markings at 93.1%. Looks to be a very friendly cattle report. Cash trade, some southern trade yesterday at 224, down $4 from the prior week. And as I mentioned, stage is set here for additional weakness in weeks to come in these cash markets. Although the Packers increasing kills, that's usually a good sign that we need more. They need more cattle, and they'll have to bid up for it. But very sloppy fundamentals and very, very poor technicals. That's the big takeaway in this cattle market. Have a good day, everyone, and good luck and good trading. We'll talk to you soon.